At the kitchen table, the repair quote stays face up, and the laptop says, "Last day to change this at work." I'll show you which milestones in your 30s buy real safety first, and which ones just make you look on track. Two people can stare at this exact pile and walk into two different months. One clears the page that keeps reaching forward, the other tries to honor every page at once. You think the grown-up answer is to spread it around. That sounds grown up. It's how you stay fragile. Put these milestones in the right order, and your money stops putting out fires and starts buying room. You keep sliding the highlighter from one page to the next, like the ink might decide for you. The tip hovers over the card box, then the repair quote, then the open benefits tab. There's still an email saying a bank would let you borrow a giant number, and one field is still blank. You look at the blank field, then the repair quote. Every one of these feels like it deserves first place. That's why this table feels loud even though the house is quiet. I hate how normal this pile looks. Nothing here is fake. That's what makes it brutal. The card is real. The repair is real. So your tired brain does the only thing a tired brain can do. It starts treating the whole pile like tonight. And because you're trying to be responsible, you start trying to be fair. A little here, a little there. That feels mature for about 6 seconds. When that happens, effort stops being the first problem. Order becomes the first problem. You can work hard and still feel stuck if every extra dollar gets sliced into 5 polite little pieces. Picture the highlighter dragging a stripe across every page. Everything gets a touch. Nothing really changes. Researchers have studied this. In broader choice research, a meta-analysis found choice overload is more likely when options are harder to compare, the task feels harder, and people are less sure what they want. One way it shows up is putting the choice off. Too many adult money choices at once can turn deciding into staring. So, on this table, the first win is smaller than it sounds. Not every page gets first place. This is the everything is now trap. It makes every adult goal feel equally urgent. So you spread money across the whole pile and stay fragile. The order is the milestone, not the look of progress, or the number of accounts, the order. Because the wrong order can make a decent income feel weak and a good intention feel useless. This trap doesn't need you to be reckless. It loves decent intentions. It loves adults trying to be fair to every page. A little to the card, little to savings, and tiny to the future. The whole pile stays alive, and you keep calling that balance. That's why the table feels personal, even when the pattern is common. You think the stress means you're behind. A lot of the time, the stress means nobody told you these pages were not equals. And the page most people delay first is usually the one with the least glamour. The quietest page can hurt you the fastest. We'll get to the blank field too, because that one can sit there looking harmless while it quietly waits to matter. Quick thing before we get into it, I'm not a financial advisor, and this isn't personal financial advice. This is education and entertainment based on research and experience. Start with the card statement. Not because it's dramatic, but because it's active. That little box is the minimum due. That just means the smallest amount the card company will accept this month without marking you late. It looks tidy. It looks grown up. You pay the small number, the angry color disappears, and the balance gets to stay in the room with you. You think if you handle that box and still send a little money to other goals, you're being responsible. But there's a catch. The first milestone in your 30s is not the smartest looking one. It's the bill that keeps reaching into next month. You can feel the lie because the box is so clean. It makes survival look like progress. Those are not the same thing. The problem with that statement is not just the total, it's the reach. That old balance keeps drafting future income back into the past. Next Friday's money shows up, and part of it is already wearing last month's name. Keyes and Wong studied credit card accounts from a large slice of the U.S. general-purpose card market. They also tracked what happened when issuers changed the formula behind the minimum. They found many accounts paid at or near that minimum, and the number itself pulled payments downward for a real share of people. When the screen shows the tiniest acceptable move, a meaningful share of people start treating it like the right move. If someone in your life is still stuck in the minimum payment loop, send them this video. That tiny box has trapped a lot of smart people for years. On this table, that statement goes to the top. It's the page already billing your future. You're not rewarding the loudest page. You're simply shutting down the page that keeps restarting the problem. I hate how respectable that small box looks. Respectable is dangerous here. It keeps bad news dressed up like responsibility. Paying that little box can stop one kind of pain. It can keep you from being marked late. What it doesn't stop is the carry. The balance still sits there and charges you for staying undecided about it. That's why this page outranks the hopeful pages. Old spending shouldn't get to stand in the doorway while you try to build new stability. If it stays alive, every new goal shows up smaller than it should have been. And 1 month longer matters. 1 month becomes another repair, school bill, insurance jump, you name it. Then the card is no longer a leftover from the past. It becomes part of your monthly life. It starts charging rent in your head. That's why the first milestone in this decade doesn't look impressive. It looks like a boring, expensive statement with a number you're tired of seeing. The goal is not to make it feel managed. The goal is to make it stop coming back. Until it's gone, it keeps grabbing first dollars that could have bought air. And once that page dies, something important changes. Every new dollar stops arriving pre-claimed by an old mistake. The repair quote still exists. The future still needs money, but the month is no longer starting in a hole dug by last season. The statement can look handled because the late warning is gone. That visual quiet is fake. The balance is still there, still asking for a cut of next month before next month even starts. If you spread extra money across the card, a house fund, and a kid fund, you get 3 nice intentions. Then the next statement lands and reminds you that intention is not relief. Relief is when the page disappears. That is the boring milestone people skip because it does not photograph well. Nobody wants to brag that the smartest thing they did in their 30s was stop an old balance from haunting every new paycheck. I'm telling you, that's exactly the kind of boring win that changes the decade. So the highlighter stops wandering. It lands here first. The page that keeps reopening doesn't get to stay open. Then your eyes drop to the repair quote. Maybe it's the car, maybe the dog. It doesn't matter. The quote is sitting there beside your checking balance like a threat with a deadline. You feel how one annoying surprise can raid every other plan on the table. Not a catastrophe. Just one normal adult expense with bad timing. Cash sitting there can look lazy right up until life shows up. Then it turns out cash is the thing that keeps one problem from recruiting the rest. At this table, cash is not a trophy. It's a wall. Picture the chain reaction. The repair hits the card. The card grows. Next month's statement gets heavier, then the benefits slider waits again. Then the future goal waits again. One bill walks in, and suddenly 4 pages have been rearranged around it. Buffet and her co-authors use survey data from low and moderate income tax filers to track what happened after income and expense shocks. In that sample, households with lower liquid assets tended to show bigger drops in financial well-being when those shocks landed. Cash doesn't just pay the bill. It can keep one bill from hijacking the month. Same table. The repair quote stays a bill, not a chain reaction. This is why a real cash buffer is a milestone in your 30s, not a side quest. It protects every other promise you're trying to keep. It protects your ability to say, no, that emergency doesn't get to raid everything. People sometimes talk like cash and progress are enemies. They are not. Cash is what keeps progress from becoming the donor whenever life gets loud. Without spare cash, every decent habit becomes the emergency fund you never meant it to be. People love to act like cash is dead money because it's not exciting. I don't care. Excitement is not the job. The job is keeping a flat tire from becoming new debt, a vet visit from becoming another year of carrying balances, one bad Tuesday from rewriting the rest of the month. No one claps for your buffer. There is no applause for money that just sits there and prevents chaos. But everybody feels the absence of it. You feel it when a simple quote makes your stomach drop before you even read the total. And this is the part a lot of adults don't get told clearly. A buffer doesn't make you rich. It makes you harder to knock over. It buys recovery speed. So, the second page that moves near the top is the one that lets the other pages survive contact with real life. Same table, but less panic. Now the laptop pulls your eyes back. The benefits tab is still sitting there, half finished, with that little percentage box waiting for a decision. You think you'll fix that when life calms down. The percentage box looks tiny, but the consequence is not. That sounds reasonable because it feels temporary. But busy months have a way of dressing up like normal life. So the setting you leave alone becomes the setting you live with. You tell yourself you'll raise it after the raise, move, or holidays. Then open enrollment comes and goes. Then another year goes by. The page didn't scream, so it kept losing. Choi and his co-authors used administrative records from 3 large firms. They found that when employers signed people up automatically for their workplace retirement plan, participation jumped, but many workers stayed parked at the low default setting for a long time. A lot of busy adults live inside the first setting, same laptop. One click tonight decides whether the future keeps waiting. That quiet default is still a decision. It's just a decision you keep inheriting. Notice what the milestone is here. It is not perfection, or some heroic number that makes you feel up to speed in one shot. It is simply making future you automatic enough that the rest of life has to work around it instead of the other way around. That matters because this table is never going to stay empty forever. There will always be a repair or a bigger thing you could buy. If the future only gets money when the table is quiet, the future never gets its turn. So the answer is not, "I'll remember later." It's, "Later is already scheduled." One click now beats a speech you give yourself every 6 months. You do not need to solve old age tonight. A small automatic start can look almost too boring to matter. Then 10 years later, it is the line you're most grateful you touched. The future doesn't need a motivational speech. It needs a place in line. That's also why this page belongs above the big shiny goals. Retirement in your 30s is not about looking ahead 30 years with a perfect spreadsheet. It's about refusing to make your future compete fresh every month against today's noise. The tired version of you will always find a reason to wait. That organized version of you lets the setting do the remembering. That's how this page earns its place near the top of the pile. Then you hit the page people love to pretend is not money. The blank beneficiary field. The note about a will. The folder with insurance papers you keep meaning to organize. You think this is for older people, or richer people, or the version of you who finally has more time and less dread. Meanwhile, the blank line just sits there like it's optional. But there's a catch. Once other people depend on you, missing paperwork can hurt them faster than extra savings can protect them. The hard part with this page is not math, it's emotion. This page asks you to picture a bad day, and your brain would rather do almost anything else. So you keep opening the repair quote, you keep checking the loan email, you keep telling yourself paperwork can wait, because nobody claps for paperwork. Using survey data on Americans 50 and older, TIAA Institute report found that people classified as procrastinators were less likely to have a will or trust. You postpone this because it feels heavy. Then heavy becomes late. Same table, different sheet. This one decides who gets to act when you can't. That blank field is the beneficiary line. That just means the place where you name who gets the account money if you die. Leave it blank, leave an old name there, or assume the rest of your paperwork will magically sort it out later. Then the worst week in your family's life can also turn into an avoidable paperwork fight. And the note about who can act for you if you're alive but not able to sign is the same kind of problem. It looks boring until somebody needs it on a Thursday morning. Picture someone you love at this same table. They have passwords, grief, they have 10 urgent calls to make. The last thing they need is paperwork that points the wrong way. That's what makes this sneaky. The balances can be fine. The paperwork can still be wrong. A lot of adults think protection starts when wealth starts. That's backwards. Protection starts when somebody would be thrown into confusion by your silence, your absence, or one bad accident. You can have modest balances and still leave a very expensive mess behind. And this is not only about death. Someone may need the legal right to talk to the bank, handle bills, or sign documents while you are still alive and just not able to do it. Protection becomes part of your money job the moment your absence would create chaos for somebody else. Money problems do not wait for funerals. Sometimes they begin in hospital parking lots, in missed mortgage payments, and in accounts nobody can touch yet. That's why this page belongs in your 30s, not in some fantasy decade when life is calmer and everybody is richer. This page never looks ambitious. It has no new car smell, no screenshot, no applause. But if you skip it, your balances can look fine right up until the day your family learns they were never the whole story. It's admin, signatures, and names on boring forms. And boring forms are exactly where a lot of family pain gets created. By now, you can feel the pattern. In your 30s, getting the order right becomes the milestone. Now the glossy loan email looks different. Maybe there's also a dealership envelope nearby. Maybe there's a listing tab open somewhere. The point is the same. The biggest bills in the room are asking to become permanent. You think if the bank says yes, maybe yes is the adult answer. Approval feels like a compliment. Compliments are expensive when they turn into fixed bills. Approval is not instruction. A lender checks whether the payment fits on paper. You have to decide whether that payment fits inside your actual life. With a repair, with a parent who needs help, with one random expensive month that shows up uninvited. BLS reported in 2026 that housing and transportation took just over half of household spending in 2024. That means more than every other dollar can disappear into your address and your wheels before the rest of life even starts. So, if those two get greedy, every quieter goal has to beg. On this table, that loan email is not proof you're on track. It's a question about how small you want the rest of the room to be. Big payments change more than math. They change how much bravery fits in your life. They change whether you can leave a bad job. This is why the house and car milestones need to stay boring, not sad, not deprived. Just boring enough that the rest of your life can breathe. Picture the opposite. The bigger payment gets approved. The newer car feels earned. Then the repair quote lands and feels rude. The card balance takes longer to die. The cash buffer refills slower. The future tab stays lower than it should. All because two giant bills decided they were the main characters. You do not build steadiness in your 30s by proving how much weight you can carry. You build it by leaving room for a real life that refuses to stay neat. A boring car. A sane housing payment. Room on the table. That is not failing adulthood. That is protecting it. The flashy version of adulthood is easy to point at. Bigger keys, bigger driveway, bigger payment. Room is harder to show off. But room is what lets you take a hit, help somebody, or breathe through one ugly month without your whole plan collapsing. Owning later is not failure. Driving something ordinary is not failure. A lender's number is not your life plan. It's a ceiling. You still need a floor. And it leads to the last page on this table. The page that usually starts too early because it feels hopeful. Now you stop staring and start writing. One short list. On this table, first the card, then cash, then the future money at work. After that, the protection paperwork, then one next goal. You think, so I'm not supposed to open every future bucket right now? But there's a catch. A future goal can be good and still be early. Open it before the floor is solid and it starts stealing from the basics. Hope can still be mistimed. A house fund is good. Kid money is good. Helping family later can be good too. Early is the problem. If all of them open while the card is still alive and the buffer is still thin, worthy goals start draining the pages that keep you upright. That's why your down payment money or kid money fund might be early, not late. The goal is still good. The timing can still be wrong. A worthy future goal opened too soon can keep the present weak for years. So, this is not never, it's not yet. There is a huge emotional difference between those two phrases. Never feels like punishment. Not yet feels like order. That difference matters because shame makes people open goals too early just to feel like they're keeping up. Order lets you keep the dream without making the dream eat the floor under you. Gargano and Rossi studied a savings app beta rollout, where some users could set goals before others could. They found goal setting raised savings, and there was no evidence that the extra saving simply replaced saving outside the app. Money with a name can be harder to spend by accident. Same table. The future stops being one foggy pile and becomes one next line. A named goal has edges, foggy money does not. That's why one next goal beats 5 nice ideas. The table finally has a front of the line. This is where the room changes. Not because the table vanished, it didn't. The repair quote may still be there. The benefits page still needs a click. The family paperwork still needs finishing. But now, each page knows when its turn is. That matters more than people think. Generic money is easy to steal from. Named money resists. Once the next goal has a clear job and a clear turn, it stops melting into whatever felt urgent on a random Thursday. Maybe tonight the next move is extra money to the card. Maybe it's filling the beneficiary line. Maybe it's raising the retirement percentage at work by 1 notch. The point is not to open 5 new missions. The point is to give one real job to the next dollar. You're no longer highlighting the whole table. You're choosing what changes first. That's what sequencing really buys you. It turns effort into progress instead of spray. It stops your money from being spread thin across pages that all look worthy, but do very different jobs. You do not need 10 new accounts tonight. You do not need a color-coded life. You need one order, one next action, and the patience to let a good goal wait until it can stand on something solid. Then, when the floor is solid, the hopeful goals stop stealing from the basics. The house fund can open without the card mocking it. Kid money can grow without the buffer staying anemic. A business idea can get a lane without the rent money feeling hunted. That is the reframe most adults need in their 30s. You are not late because you have not opened every worthy goal. You are late only when you keep pretending they all deserve equal urgency. They do not. Get the order right, and that becomes the milestone. Then the same kitchen table tells a different story. The statement is shrinking instead of recycling itself. The cash buffer turns a surprise into an inconvenience. The future tab is already working in the background. The blank field is no longer blank. The giant loan email has lost its power to flatter you. The pile still exists. Adult life does not stop mailing you things, but the pile no longer gets to vote on the order. You do. Nothing magical changed. You just stopped treating every adult money goal like tonight's emergency. And once that happens, your money stops acting like a fire bucket and starts acting like a room.